Hello and welcome to Pro Trader Strategies Market Commentary for Monday, April the 4th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data coming out today. We did get construction PMI across the pond for Great Britain, came in at 54.2, right in line with expectations. And factory orders here in the U.S. came in at negative 1.7 versus negative 1.5, which was what was expected. Other than that, not a whole lot going on today. It is a Monday, but the markets are giving up some ground. As you can see here, the NASDAQ is down 24 points, almost 25 points right now, a little bit off the lows that we saw overnight. But for the most part, we are right at the point of control, which is where the most time and volume has been spent over the last few months. On to the E-mini S&Ps, as you can see, /ES is down 6 points, just a little over shy of that, off of the lows, but we are still starting to sell off the lows that we saw earlier this morning, about a half an hour ago. So the market's kind of rebounding up just a little bit, but for the most part, it looks like the bears are in control of the day so far. On to a couple of things that I've done. The one thing here was GDX, the gold miners ETF. And I talked about this in the webinar on Friday, doing short call spreads. This has been trending sideways pretty much for the past month or so, and I continue to see it to want to trend sideways here, just with the lack of data coming out anytime in the near future that's going to be really market moving. So unless something major happens, I can continue to see this to move sideways. And I talked about this. It has high implied volatility, so this is a good candidate for the short call spread. Plus, we just topped out not too long ago, and I was able to construct this around that high of 21.42. So I did it in the May and sold the 21-22 call spread for 28 cents. I collected 28 cents for that. So if you watch the webinar, I talk about collecting a third the width of the strikes. The dollar wide 28 cents is right in line with that. My minimum is 25% the width of those strikes, and so I was able to kind of middle that. There's just not a whole lot of implied volatility out there. As you can tell, the overall market has been moving upwards, and that creates a low implied volatility environment, because as the market goes up, there's no real fear in that. When the market starts correcting, that's when we'll start to see some volatility really start getting pumped into some of these equities, ETFs, and things of that nature. But for right now, there is a bit of fear on the global economies of scale, so that's going to want to pump up volatility in things like GDX, which is the gold miners ETF. So they're the ones that are producing gold or finding the gold. So that has been inflated for some time, and if we can see that revert to the mean in GDX, then that's when I'm going to see that premium come out of those underlyings. And it's a bearish sentiment on this, neutral to bearish, because I'm short calls in that. So that's what I'm looking for in GDX, and I talked about that in great detail for over an hour last Friday. So you can go to protraderstrategies.com and sign up for that. It's really important to get some short deltas in your portfolio, because when the market moves down quickly, and when it moves down quickly, it happens more often than when it moves up quickly. So it's nice to have those negative deltas in there to protect your portfolio. So go go to ProTraderStrategies.com. I have all kinds of webinars on that as well, and you can sign up and have those sent to you. Friday's webinar, we're going to be talking about short put spreads. So staying with that basic option strategy mentality where the newer trader or somebody that doesn't have a whole lot of margin in an account or doesn't have $1 million, these are going to be appropriate for somebody that has less than $10,000 in their trading account. So you can get your feet wet, I guess, if you will, for the options. They're just a great tool to have in your arsenal, especially for trading, because you can play with a lot less margin than you would if you were just to go out or buy or short a stock. So check that out. The only other thing that I have working is in Cummings, and I got a couple of short call spreads in there. This is acted as resistance, so I'm looking to sell some call spreads above there with a 113 strike, and the markets in there are pretty wide in Cummings, which the ticker symbol is CMI, and they just haven't been hit. It's not looking very good, so I'm not going to move it down anymore. I've moved them down a couple of notches, but I'm going to stay with my 25 to 30% of the width of the strikes in that, and I'm not going to give up a whole lot of edge. If somebody wants to come to me, then that's great, but otherwise I'm going to let it ride. Or let it work, I should say. So working those orders with the short 113 strike and a couple of strikes above that, I have the defined risk for that. All right, it's a real short one today. That's all I really got for you guys today. Go to ProTraderStrategies.com, sign up for those webinars. They're really good ones, and hope to see you guys all Friday. If you can't take that, take it easy.